All right. All right. Welcome back to another episode of the Simply Real Estate Podcast. I'm your host, Kiki Salcido, and I have our producer here with us, Estevan. With us today, I'm very excited. We have Brock Mogensen out of Milwaukee. Is that correct?
That is correct.
All right. So I did a little bit of research on you, and the more I read about you, the more excited I was to actually have this meeting today. So thank you so much for joining us. So first and foremost, did you grow up in Milwaukee?
Yeah, a little south of here. I grew up in Kenosha, Wisconsin. Okay. Some people might have heard that town in the news recently. Yeah, so that's where I grew up. And then I'm 30 minutes north now in Milwaukee.
Perfect. And then, so I read a little bit about you. I think you did your first flip in 2018. Is that right?
Not necessarily a flip, but it was a duplex.
My first deal
was a duplex in 2018. Yep.
Okay. What got you into real estate?
Yeah. So really looking back on it now, it was growing up. My dad owned 2 duplexes. So I grew up actually before I think anyone really knew that had a term for it, the house hacking model, right? Which is very common now. I actually grew up as a kid doing that in the 2 duplexes. I lived in one duplex for a few years growing up in the other one. So that was kind of what growing up I just saw, both my parents, very, blue collar jobs, but just simply owning 2 duplexes, what that could do for your income, your lifestyle, all the above. So growing up, I kind of saw that, and it was always ingrained in my mind. Out of college, the goal was to just buy a duplex, and nothing. I didn't really have any thoughts beyond that. It was maybe I'll buy a few duplexes throughout my life, like my dad did, and it'll supplement my job income. So I get out of college, save up some money, buy this first deal, do the house hack model, and that I fell in love with it. And from there, I just went off to the races and started scaling real quick and grew it pretty quickly a few years after that.
So for some of the listeners that don't understand, would you just kind of describe what a house hacking model looks like?
Yeah. So essentially it means it could be anywhere from 2 to 4 units, because that's the qualifications for FHA loan, right? So that's generally what it's done with. And you're living in one side, renting out the other. Usually, in most markets, living for free. I think at one point for me, I was actually making money because I had roommates in the one side too. So it's awesome, but it's a great way to get started because you're able to leverage FHA loan, right? 3.5% down, and really get into these deals with low amount of money out of pocket, learn a ton about how a transaction works, and live for free, and then move out and make money once you move out. Yeah,
no, I love that. And every time I talk to somebody that's, young that wants to get into real estate, I always say that's probably the best place. If you're going to be buying your first house, I think that's a great place to start, getting your feet wet as an investor and as a property owner. Right. So what were you going to school for?
My undergrad was international studies. So it wasn't really related to anything I'm doing. I did an MBA after that too. And, but yeah, some of the stuff you learn in college helps, right? But I think overall, it was a lot of just podcasts and books are really where most of my education was from.
Okay. And where did you kind of find this? You said podcasts and books, but did you initially start looking at house hacking and how to structure deals, or because where you are now in, that short amount of time, it feels like you got a whole college education in that little bit of time. So I want to know for the people that are starting out as an investor, where did you first find good knowledge? Because there's so much crap out there,
Yeah. And I think the best place, because you're right. There's a million different places to get education in real estate, and some of it's a lot of the fluff. So I think for me, it started with Bigger Pockets. I think that's a great place for people to start. I love their platform. The forums, their podcasts, their books they have. It's a great platform to start. And really, I haven't listened to a lot of their stuff recently. I know before it was very basic and kind of teaches you the fundamentals of the different avenues in real estate, because there's so many different ways you can go, right? Flipping, wholesaling. There's a lot of different ways you can go in real estate. So I think building that fundamental education and then establishing, okay, I want to take this direction in real estate. that's a good place to start. And that's really where I started. I mean, I was at my job, the position I was in at that time was a lot of mindless work. So I just cranking podcasts all day. And I really just started learning about the basics. That first deal I did, I mean, I really didn't have, looking back on it, I mean, maybe had listened to a handful of podcasts and read a book that was about my real estate knowledge at that time. But it was after I did that deal, it like sparked everything. And I was like, all right. And that's when I really hit the ground running and just went all in on learning as much as I could after that.
What did that first deal feel like?
It was nervous, I think, to not really knowing what I was doing. I mean, the numbers were pretty easy to understand on a duplex. I mean, I knew that it was going to make money and I was going to be good on that way. But like the inspections and stuff like that, I mean, it was an older property. I was like, what if I'm missing something? What if I buy this thing and the roof breaks next month? I mean, what am I going to do? I don't have 20 grand to fix it. So it's like that. I think that's where I was most nervous. And I had an inspector and all that stuff go through, but it really, like, once I got through that process, I realized how easy it is to work with banks. And that it's pretty straightforward. And as long as you follow the steps and do all your due diligence, that these deals work out.
The reason I ask is so many people, they get interested in investing in real estate, or even, getting licensed as a broker, or really just getting involved in any aspect. And they don't ever, there's that analysis paralysis, right? They kind of just sit and, man, I used to go to these meetup groups out here in Albuquerque, and there was maybe one investor that actually like flipped a house, and there was like 20 of us meeting up. And it was just blowing my mind that, we would go every week and we would talk about deals that, they found, but nobody would pull the trigger. And I feel like once you pull that trigger and you actually go for it, like, man, the world like opens up to you. And I think you're a prime example of that.
Exactly.
What was the next move? Because I mean, FHA, there's a certain requirement that you'd have to have before you move on to the next house. So how did you go from, how many units do you have right now?
So after that duplex, I transitioned into the syndication model. So it's essentially creating these partnerships and going out and do deals. So I don't own everything on my own. I own a percentage of each deal we do. But we're in several different asset classes. So it's hard to put a unit number on it. I mean, apartments are like 110. That's about a quarter of our portfolio. So we have retail, industrial, self-storage. So we have a few different asset classes. Overall, we're at about 20 million in real estate.
Amazing. Wow. And that's what actually really got me excited about talking to you is, the syndication model is something that I've been extremely, extremely interested in. And it's a complicated, maybe I'm overcomplicating it, but, to find somebody that was able to do it and is doing it successfully. Can you just kind of break down like how you got in, like how that model kind of showed itself to you, what that was like? How'd you educate yourself? And then how'd you end up finding all these, partners to buy $20 million worth of real estate?
Yeah. So it's a good question. And I think when you're first looking at it, it's a lot, right? Like, oh, I got to, raise money. I got to find the right deal. I got to investor relations. I mean, there's a lot of moving pieces. So my approach was, I think this is a good approach for someone that's looking to get into it, is don't try to think you're going to go out and do it on your own. And I have to learn everything. I have to learn how to raise capital and this and that. I think the better approach is to really bucket. I mean, the way I look at it is there's probably about, 4 to 6 different big buckets of like what goes into these syndication deals. Define which one, right? Everyone has their strong suits. Everyone has one, and define which one you think you're best at naturally, and spend time really becoming an expert in that specific piece. And then once you get to a level where you feel confident in that piece, you go out and you find other partners that are strong in these other pieces. So for me, it was underwriting. I came from an analytical background. I understood spreadsheets. That's where I spent 6 months. All my time was just practicing underwriting deals, learning about how to be conservative on underwriting and all these different things. So when I got to a point I felt confident in it, I went out and started looking for partners that were strong and that had the experience, that were able to raise capital. And I'm bringing in this analytical component to the table. And that's ultimately, I ended up partnering with another 2 people that one of them had a ton of experience already. And we were able to kind of combine efforts and go out and do the next deal was an 89 unit apartment building. So it's, really, it's just defining what you're good at and creating partnerships. I've seen people that go out and syndicate these deals on their own. It's hard. I think it's better to have maybe a 2 to 3 person team as the general partners and combine all your efforts to go out and make these deals happen.
Yeah, no, 100%. I love that you touched on that, because I think the common theme with our podcast and, all the guests that have had significant success, they buy into the team model, right? They understand the value of having team members that complement you in business. And, I just love that, because so many people want to do it all and they want to own everything, and you don't have to, right? It makes it a little bit easier, and you can probably do a lot more if you just specialize in one aspect. And then, a good mentor of mine, one of my first mentors, would say, create the value in yourself that the world can't ignore. And so I think that is exactly kind of the point there. So you mentioned underwriting, and I'm in real estate. I do probably, over 100 some transactions a year. I don't fully understand underwriting. So maybe you could shed some light on what is underwriting and what is it? Yeah, exactly.
Yeah, I mean, really, underwriting I think it's a fancy word for analyzing. Those two words really mean the same at the end of the day. And it's the process of just analyzing the numbers. I mean, it can be put into different terms, right? I mean, the bank's going to use the word underwriting, and your insurance rep's going to use the word underwriting. Really, it just means doing your due diligence and analysis on the deal, on the numbers. And that's underwriting, as far as my definition of it, underwriting, analyzing a real estate deal, the numbers, seeing what makes sense, looking at different metrics to determine at what price you can pay for the property. And it's different in different asset classes, different deal sizes, right? You're going to analyze a 2-unit deal different than you're going to analyze a 50-unit deal. There's going to be some different pieces in there. So it's really just about understanding where you need to be conservative in the numbers, what sort of metrics to be looking at. I mean, there's like 4 or 5 different metrics. You can't just look at a cap rate and decide if it's a good deal. You need to be looking at all these different metrics and piece them all together to decide what price can I pay for this deal? What strategy can I implement? And, where does it make sense over the 5 to 10 year period? Because most deals, and the way we're structuring at least, is going to be a 5 to 10 year hold. Okay.
So whenever you get into, that the bigger playing field, obviously you're in different asset classes. The returns are obviously a bit different, but like you said, 10-year, 5-year deals, like how does that play out? Do you get like these big checks at the end of 5 years, or is it kind of like you get paid on the deal as it kind of progresses? And then how does that work with the investors? Like if somebody wanted to invest in one of your deals, how would they go about doing that?
Yeah. So our deals are going to be, we do, and this is common. It's quarterly cash flow. So you're going to get paid every quarter cash flow from the deal. And then waiting for that 5 to 10 year period of either the 2 big capital events are generally going to be a refinance or a sale. So that's usually the play, is the investors you're going to get cash flow every 3 months. You're waiting for, 5 to 10 years from now, to really hit your 2 or 3x multiple. These deals can be, and this is probably the most confusing part of this syndication model, is how many different ways there are to structure these deals. People get very, very complicated with like waterfall structures and hurdle rates and all that. But the basic way to look at it is these syndication deals are a GP LP structure. So general partner, limited partner structure. The general partner is the one that does all the work, right? So that's generally the 2 to 3 person team that they're finding these deals, they're analyzing them, they're putting their name on the loan, they're raising the money, they're managing it, they're doing all the above, right? And then there's the limited partners that just write the check, invest passively in the deal. They get their checks they get some money every 3 months. They get some updates every month. And that's the really 2 different classes. So the first question you probably think is, why would, the LP group has the good deal. They're doing all the stuff. The reason why they're going to do all this work is because they're going to get sweat equity in the deal, and they're going to get different fees. So there's a few different common fees. The 3 most common are going to be the acquisition fee, asset management fee, and then your GP equity stake. So an acquisition fee, generally 2% of the purchase price, you get that at closing. Asset management fee is 2% of the top line rental income that you get paid out every quarter generally. And then the equity stake is really where you make the most money. So that's where the equity stake part's where it gets complicated. But a real basic way to look at it is an 80-20 model, where any profit that comes in, every dollar that comes in profit, 20 cents goes over to the GP team, 80 cents goes over to the LP side, and then it gets divided up by how many investors you have. So that's really the most basic way to look at it. And that's why you do all the work, right? So if you're the GP team, you sell this deal for $1 million more 5 years later, you're taking 200K right off the top. So that's a real basic way to structure them, but it kind of puts into context how these deals work.
No, I think that's amazing. And how does that compare with like a traditional stock market? The returns are going to be a little different, right?
Different. Yeah. There's different benefits. The biggest difference is it's not liquid. If you're the stock market, I could put in money and take it out tomorrow if I want, but it's with these real estate deals, there's ways to pull your money out early, but it usually gets screwed on what you're going to get back if you do it that way. It's not ideal. Yeah. So your money is going to be tied up for 5 to 10 years. And that's the biggest difference. But there's a lot more benefits if you're willing to tie your money up that long. You're going to partake in all the tax benefits. There's a ton of investors out there that invest in these deals solely for the tax benefits. Yeah. They really don't even care what they're going to make. They just want these tax benefits because you can do cost segregation studies and there's just massive depreciation you can pass through to investors. So that's, it's a great avenue for people that, as far as on the LP side, that want to invest passively, that there's a lot of people out there that don't want to deal with tenants calling them. They don't want to put their name on the loan. They don't want to get the insurance. They don't want to do all this work. Yeah. So it's great for them if they're high income earners and they can write checks and partake and get all the benefits of real estate. It's a great model for them. And on the other side, for the GP, it's a great model for someone who doesn't have much capital to buy all these deals on their own. They can scale much quicker. Okay.
So you bring the passion and they bring the profit, and together you guys both make deals, right?
Exactly. Yep.
Perfect. So man, syndication, I couldn't imagine going from buying my first house to being in syndication 4 or 5 years later. So how did that journey kind of take off?
It was, it was a lot of I kind of set my mind. I started, so after that, I was looking at different avenues of, I was trying to flip houses. I was trying to do wholesaling. I was putting signs out, in the yard, sending out letters. I just didn't have much luck. Never really found it. Maybe if I ended up finding a deal to flip, that's the route I would have took. But I wasn't having any luck. And really looking back on it, it was listening to a lot of Grant Cardone stuff. I think most people now know who that is. Some people don't like him. Some people do. I think he gets mixed reviews, but I like his stuff. And anyway, so I started. Oh yeah, yeah. So I started listening to his stuff, and he just always was talking about go bigger. You don't got to start small, and that's what. And then the syndication stuff popped up because that's essentially what he does. And I just kind of started going down that avenue, and I was like, this is sweet. Started going to conferences and learning more about how it works, and that's just went all in on it.
So conferences, you invested in yourself, right? You spent all the time, and you didn't probably go out partying every weekend, right? You probably spent your time in the books. And look at you now.
It's definitely a lot of, it was a year of just a ton of work. I still work a lot, but looking at that year, it was a lot. Yeah, totally. You got to invest you don't got to go out and pay 20 grand for one of those top courses. There's value in it for sure, but you got to invest in yourself, and whether it's your time or some money, you have to be willing to invest in yourself if you want to grow.
Yeah, no, for sure. So has it been 5 years since you officially got into real estate? About 4 or 5?
Yeah, about 4. Yeah, that sounds about right.
Okay. So, man, you've done a shit ton. Excuse my language, but man. So where's the next 4 years? Where's the next, 5, 10? Like, what does that look like for you? Are you going to be Grant Cardone?
Eventually. No, I don't know, 5, 10 years. That'd be cool. We're just continuing to scale and, trying to do larger and larger deals. Looking at a few different, getting more creative with how we're structuring our deals, building our investor list. And we have like 75 investors right now. So continuing to put time into that, to grow that. So, there's a lot of exciting stuff. We're growing quick, but there's always, more to come and more to do.
So talk to me about like the biggest deal you guys have done so far?
Our biggest deal was we closed at the end of last year, was a mixed use deal in kind of like a downtown trendy sort of neighborhood here in Milwaukee. So that was that was 4.4 million, that deal, and it was about half apartments and half retail.
Okay,
So that's been our largest. We've done a few deals just slightly smaller than that, but that was our largest deal and probably our most exciting one, just because it's Class A stuff right downtown, really cool location. So we were really excited about that one.
so what the duplex you bought? How much was that?
I think like 170, 180, something like that.
So 170 to over $4 million, man. That's a big difference. Big jump in. It's crazy what a little bit of education will do for one, huh?
It does. I mean, that's really, I think the more you like get out there and like education and networking, I mean, it's so, especially in real estate, like your network is so important. If you just it's crazy how much, like in 6 months, if you just dedicate yourself to, I'm going to listen to a podcast a day, I'm going to read some books, I'm going to go to a networking event once a week. And that's really all I did for 6 months. And it was like 6 months later, I went from not knowing anything about real estate to like, now I have a general understanding, right? I kind of know how this works. I can go to the networking events, I can hold a conversation about real estate. And you're always going to learn more, right? I feel like every year I go into real estate, it's like, wow, last year I really didn't know shit about this. Now I actually know. So it's like, you're always going to continue to grow, right? And you look at the people that have been doing real estate for 40, 50 years, like, wow, how much do these guys know? So you just got to continue growing and continue learning and continue building your network. I mean, you'll advance really quick.
So for the people that are just starting out, I know that they have the exact thing that you were just talking about right there. They feel like they can't hold a conversation in real estate. So they go to these conferences and they don't talk to anybody. How bad is that in your opinion?
Yeah, I mean, it's tough. It's tough to overcome, right? Especially someone that's I mean, if you're more like on the introverted side, right? And you go to this conference and it's like, oh, I haven't done a deal yet. And so we host a meetup here. Along with my partners, we host like a monthly meetup. And so I see it all the time where it's like people come in and you can tell like they're just kind of standing in the corner, like not saying anything. And I try to go start a conversation because I was there where it was like, you walk into this room and it's like, oh, I know I'm the only one in here who hasn't done a deal. Like, what am I supposed to say? Like people are generally accepting in real estate, I feel, and they want to help. They'll be surprised like how many people with a ton of experience are willing to jump on a call with you and kind of guide you in the right direction or talk to you quick about your first steps you should take. So I think you just have to get out of your shell and just every market, as long as you're not in the middle of nowhere, has some sort of local real estate meetup.
Yeah.
Go out there and just attend. Most times they're free. They're probably at some bar or restaurant in your local town. Just go out there and go to them and listen to, usually they have a speaker, and just start meeting people and start talking and let them know what your goal is. And it just snowballs from there.
Yeah, definitely. I mean, definitely your network is, I think it's invaluable. I mean, the people you meet today could be, the people you're doing deals with tomorrow, whether it's, you met them as a rook and they might have been an expert, and then, you're doing these big deals with them just a few years later. So yeah, that's kind of what I wanted to get at, right? Is people do just need to get out of their shelling and just go talk. Like if you're interested in the subject, go learn more about it and you'll be able to carry a conversation eventually. But we all started, and I think that's the key, right? We all started, and then you just have to start. And you'll be doing $4 million deals in 4 years. That's insane. Dude, literally $1 million up every year. That's awesome.
Thank you.
So I ask every guest this, and I know I kind of throw people off whenever I do this, but do you have a horror story or something funny that's happened to you since you've been in the business?
Yeah, there's been a few already. I think, I'll tell you. So that the biggest one right now, just because it's top of mind, because we're really going through right now, is we bought an office building. About what month it was? It was November 2019. We bought it, right? So perfect time to buy an office building, right? So COVID hit. What was that, like April 2020? So a few months after we closed on this deal, COVID hits, and we quickly learned like office is about to get hammered. So, we have all these tenants that start moving out, the company goes under or whatever. They don't want their office space anymore. So we're already getting hammered there. Then all of a sudden our parking garage decides, there's a parking garage connected to it, decides not to start crumbling a little bit. So we, that was, a lot of learning lessons there about what to be more choosy about what sort of asset classes and look towards a longer horizon of where that asset class is heading. Really go deep into your inspection of every single piece, especially in these larger buildings. And so, it's turned into, a big problem with that property, but then again, we're taking it and we're going to turn it into a positive where we're looking at a new development play to knock the whole thing down and build apartments. So there's always a bright side to every horror story. Right. But it still is a little scary right now, but at the initial, of all that stuff piling up within a year is a lot.
No, I'm sure that initial scramble is, people started moving out. That was daunting. You probably had people calling you all the time. Right.
Yep.
But I love that you're solution oriented, right? You didn't think, oh, let's just get rid of it and take a loss. You think, well, the future, right? There's a crisis in inventory as far as, residential housing. So let's make more residential housing. So That's beautiful. Beautiful. I love that. So were you valedictorian? Were you straight A student?
No, complete opposite. It was, I think a lot of my like college friends are, surprised that in college, I was always in the middle, right? I was never like smartest kid in class, just kind of hanging out in college. Didn't really have much ambition. And then all of a sudden it was like something right after college, it just clicked. And I was like, I always had kind of an entrepreneurial mindset growing up, doing different things, but it was definitely not like foreseen, I think, looking back at like where I was at in college.
What do you think was that thing that clicked?
I've thought about it a few times. I don't necessarily know if it's an exact moment. I did a study. I think the biggest thing was probably I did a study abroad at towards the end of my college time. And that kind of opened my eyes up more to there's a bigger world out there and there's a lot more possibilities and what you can accomplish in life. So really, if I had to choose one thing, it was probably that, because that's really where it started focusing more on my career and wanting to grow.
So a little bit of travel.
Yeah. I think I would recommend. It was an accident how I actually ended up doing a study abroad, but it was,
where'd you go?
Travel's awesome. Barcelona.
My goodness. Yeah, that's good for your soul for sure, man.
Oh yeah.
I'd like to connect with you on the side a little bit more. So Smart Asset Capital is your company, correct?
Yep. Yeah. Smart Asset Capital.
What is could just anybody invest, or do you have to have a certain income to invest? What does that look like? Do you have to be accredited?
So we do offerings that allow for non-accredited and accredited. So that's how we set up our deals. So generally our deals most of the time is 25K minimums for investments, and that can range from 25 to 50 depending on the deal. And you'll see that's pretty common across most operators. Yeah. But what's required is building a relationship with the investor, not necessarily allowed to advertise for deals or have people just come right into a deal. So, if anyone's interested in building a relationship to talk about future deals down the road, you go to our website, which is just smartassetcapital.com. You can prompt a call on there and we can talk.
Well, we're definitely going to be building that relationship, because I think with the amount of growth you guys have had in the past 4 years, and definitely bright horizons for you guys. So, dude, thank you so much for tuning in today. I apologize for the technical difficulty as we got started, but wealth of information. You cleared up a lot of questions I had about the syndication, and I think you inspired me to take it a little bit further myself, as far as just pushing towards the dream. And I think that's great.
I appreciate it. Yeah. Thanks for having me on. I'm glad to teach more people about this whole concept. Yeah. So that website is our company one. We also recently launched it's kind of, we're turning into a mastermind sort of group, but right now there's just a ton of free content for people that are trying to be more on the active side. That's capitalclub.io. And there's a whole bunch of free ebook downloads and stuff like that. And then, if anyone wants the Instagram, I'm pretty active on there, posting a lot of real estate stuff. That's just my first and last name, Brock Mogensen.
Perfect. Thanks, man.
Yeah.
Have a
Thank
good
you.
day.
You too. Thanks for having me on.